Understand that the HDFC Life Board has now given its nod to its IPO proposal. The company will perhaps continue to look at the possibility of a merger with Max Life, but it is going to go down the IPO route. That is the preferred option, and that is exactly what CNBC TV 18's Yash Jain has been reporting. Nisha joins us now. So, Nisha, the board meeting, I understand, is just concluded, and they have decided now to go ahead with the IPO plans.
That's right, Shireen. In fact, we have been reporting that, and that particular proposal has gone through. The board really wants the company to hit the IPO market when the going is so good around the insurance companies. The valuations are good, the markets are buoyant, and there is enough liquidity. But remember that another bit that the market was confused about is the Max Financial Services and Life merger with HDFC Life. And that bit is still kept open. There is a small opening for that particular deal as well. It's not completely off the table, is what sources with direct knowledge share with me, that it did get mentioned in the board, and they said that if before the filing of the IPO, if the merger can be concluded with all the regulatory approvals, remember IRDA section 35 was the biggest roadblock for the last structure of this particular merger. So if all that can be concluded ahead of the filing of the IPO, then they'll go ahead with the merger, and therefore the company will be listed. But if the IPO filing happens first, then the merger can really take a back seat. So at the moment, the window of opportunity is still open. That deal is not completely off the table, but of course it's a very daunting task to get all the approvals in such a short time, something which has been pending for over a year. In June 2016 is when they announced this particular merger, and they have hit many roadblocks and haven't really managed to really consummate this particular transaction. So very clearly IPO is what HDFC wants for its life insurance business, but is the merger off the table? Not completely. They have a very small window of opening, a small opportunity if they can really manage to squeeze through with all the regulatory approvals and the right structure which can be palatable to the regulator.
Which looks like a difficult task at this point in time, Nisha, given the kind of response that we've seen from the regulators so far in terms of the structure that was put forward, and almost an 8-long-month wait, even when it comes to the Attorney General's opinion on the matter, now the former Attorney General's opinion on the matter. But many thanks for joining us, Nisha, with that story.
Yes, if I can add just one small bit, Shireen, of course, the IPO market is very buoyant, but why they require this deal is also very important. Bank assurance is one big benefit that was coming with Max Life really coming into the picture and merging with HDFC Life. So Axis Bank, being the distributor for their life insurance business, would have really pumped up their valuations. So what they were looking at with this merger was over 66,000 crore rupees worth of company, and whether they can really command that valuation in the IPO market where the paper can sell at those valuations is something to be seen, and that will be a difficult task. So they will still want an easier way of getting higher valuations in the insurance space and that uptake. So that has really got enough value. So if that happens, that will be a very easy way of getting higher valuations for HDFC Life as a listed company. So they would still want to look at it, but easier option can be IPO if the merger really doesn't go through.